Good morning, everybody. Christian from Serene Education with my analysis this morning for Wednesday, the 20th of February 2019. Okay, let's have a look at the matrix. We had a great day yesterday yesterday afternoon in particular, on a lot of the pound crosses, especially the commodity crosses. And I'm just looking at the pip returns so far over the last, say, 12 hours, and they've totally changed. Yeah, we saw some huge figures, pound increasing in value yesterday, but so far they've retraced somewhat. Small numbers, into double-digit numbers, but yeah, we've seen a clear retracement or pause or profit taking after yesterday's movement. So what we'd like to see is further continuations of what we saw yesterday. And funny enough, I couldn't seem to find or put my finger on what it was that actually created the move. But nonetheless, the charts were telling us that there were opportunities arising early yesterday morning, and that led to the opportunities early afternoon. I mean, we were teaching yesterday, I was thinking we were going to have one of those days where the poor student was going to be sitting with us and we weren't going to get an outcome. But thankfully he was able to take 6 trades in total, 5 of them very good winners and 1 loss at a small amount. That's after pulling or moving a stop up too aggressively. But nonetheless, great day. Let's hope we have more of those, especially when we have a lot of uncertainty out there. I'm going to spend more time looking at the left hard right or hard left corner on the majors in particular. But guys, if you just pause the video and just have a look at the matrix over here and look to see if you can find anything out there that has continuation of that sentiment throughout the time frame. So looking for clean matrices. So if you start to see, we want to see the MA ideally all red or all blue across the entire, so we have a strong trend direction. And then we want that MA, the MACD on top to give us a momentum indicator. So you can see that example of the pound crosses, you'll notice that there's a lot of uncertainty that's crept into price action, especially over the last 4 hour and lower, predominantly after the huge moves we saw yesterday. Pause the video, have a look to see if there's any clean matrices out there. Anybody who's done the FX Ultimate, the training will understand this matrix. All of you that are interested in what happens with this matrix, just get a hold of us at sereneeducation.com. Leave us a message and we'll get back to you. So let's start with the euro against US dollar. So I'm going to open up a chart of the euro against US dollar. I'm going to use the Forex Made Ezee template, which is our level entry template on this one. Just going to refresh the screen. There we go. So we get genuine data coming through. Okay, so we know this particular pair has fallen from the heights in 2018. So that's the 2018. The year 2018, you can clearly see that we've fallen back into the 50 moving average, and the 50 has been doing a job of kind of supporting price as she's edged lower, especially through the last 6 months of last year. We can understand that the 50 moving average is doing a fantastic job of supporting at the moment, but she's also found a lot of support and resistance, or support particularly after the August low. We've seen price heading into the level but not being able to break and close lower than this point. So we clearly have a strong support mechanism currently at where we're trading. But if we look further back, you'll notice that price has also been consolidative over many a year. So I'm just going to use a line over here just to gauge, to guide us in terms of that emphasis. So you can see 2015, a lot of ceiling level. 2016, a failed breakout and a pullback at that same level. Then 2017, the end of 2017, we saw a breakout and pullback, and then you can see over here. So we're seeing a lot of hesitation currently for the month of, through most of the latter part of 2018 for this particular pair, but going into 2019, you'll notice that price has been able to trade below this current level, but not being able to close low. And ideally what we want to see, if we're looking for continued selling in this case, with the sentiment that we're seeing at the moment in terms of euro weakness, is imperative that we see price closing lower than this particular point at some stage to give us further indications of a potential long-term continuation, and we can then start to look at those 2016, 2017 lows as a viable target level, TP level, okay, for 2019. Okay, so until then, we need to be patient enough to just wait patiently to give us that sentiment. You can really see that this month for the February, we've actually seen the euro trading into the lows that we saw back here in November. But you'll notice that prices failed to hold on to those levels, okay, which is a concern, because if I'm looking to see a viable statement of intent, i.e. intentional selling continuation with the direction, we don't have it currently. Okay, because clearly price now pulled back above that 50-period moving average. Hence the reason why I've drawn a line on that 50-period moving average, because now if I drop down to the weekly, the daily, etc., I know where I need to be below in order to be looking to trade with more probability and less risk. So that's the importance of here. So if we look at the indicators, you'll notice that the 200-period moving average is above price and the 50 is acting as support. Now in a strong trend, you would ideally like those two moving averages to either be supporting price in an upside trend and resisting price in a downside trend. When price is trading between the two moving averages, it tells you that you're in a consolidation. In this case, you can clearly see a very long consolidation. Okay, we're now point A at the top. We're now trading at point B. If we don't break below this level as we head further into 2019, we could be left with a scenario where we're starting to forge out a very strong support mechanism, and we could, as we head into the latter part of 2019, be expecting to see price then pushing back up towards the 200-period moving average, which would be back towards point A again. So we're effectively in a huge range. Okay, we have intermediate trends within the range because of the size of it, but this is the case where we are currently trading at the low point on effectively what is a massive prior resistance level, which could be essentially a support mechanism. Prior resistance becoming a new support. So if we don't break through this level as we head further into 2019, there's always the possibility we are now witnessing a strong foundation being placed in hand. If this is clear to be a strong foundational period, what we need to do then is obviously to be trading outside of the 4 consecutive month consolidation point. It becomes more apparent when I drop down to that weekly. So let's get down to that weekly time frame. So just before I do that, I just want to show you the RSI. You'll notice that the RSI is also below the midpoint, so we are looking negative, but you'll see the RSI is flat. But there again, price has been flat. So the relative strength index on the monthly is pretty much doing what price is doing on the chart itself. MACD, because we've seen a fall from grace throughout 2018, the MACD is obviously crossed over, histograms crossed below, so these are all signs of negativity, and you can see the histograms were, up until, say, I think it was October, making new lows, which tell us that there was continued selling sentiment. However, since October, you see the November, December, January candles have not made new lows, but that pretty much ties up what we're seeing at the moment now. We haven't seen any continued selling momentum, therefore the histograms are not going to be making new lows. So there again, pretty much indicates to me that I'm in a consolidation. I have a negative trend, but I've got consolidation in that negative trend. So that's a concern, because if I'm looking to sell, I need to see continued selling in this case, which means I need to be making a new low, and a new low for the first time in 6 months. So yeah, if you're looking to try and sell this right now, you're selling into a very strong support mechanism. Hence the reason why I'm looking at the monthly and indicating to myself I need to see a stronger breakout. Yes, I might lose the best part of, what are we looking at now, from price? We're roughly around about 150 to 200 pips in order to give me that clear sell indication. But what it will then allow me to do is to tap into the long-term target, which is the 2016 and 2015 lows, which is in excess of 700. So to give 200 to the market, to give me 700 to give me roughly around about 500 in return, I'm happy with those odds. Let's drop down to the weekly. There you go. You can see now what was the 50-period moving average doing the support side of things. You'll see that the 200 in this case is doing the support side of things, especially over the last year or so. Okay, so you can see August back last year. Yeah, price is trading back into that level again. So we know that price here on the hard right edge has now broken below. Okay, that's an important sign, because if you look at what's happened, especially since August of last year, you'll notice. Let me just grab this and make it bigger so you can see that. Okay, so that's the previous one. Notice that the August low traded below the 200 but closed above. You'll notice through November, through December, we had multiple attempts below the 200 but closed high. Below the 200 closed high. Below the 200 closed high. Here, however, last week's candle traded lower than the 200 and closed low. Yes, we saw a lot of profit taking, okay, which ate into pretty much 60% of the entire range of the candle, last week's range, but it still closed lower than the 200-period moving average. So now we're seeing a more decisive indication that we still have more sellers around. Having said that, this week has pulled back, but then with any breakout pullback, you would expect to see a pullback, and that's clearly what we were seeing. But as we head into the latter part of February and into the start of March, we need to see the 200-period moving average now acting as that resistance level. So before it was support, and draw an S. Okay, through the last 7 months or so has been a support factor. Now we want to see the resistance, because if she finds resistance at this particular point and then pushes down on the underside of that, we then could see that continuation. So we've had price going sideways, then the breakout, the pullback to the underside of the support mechanism, and then the continued selling sentiment coming through. That's what we're looking for. Okay, so currently we're witnessing some euro strength coming in, but as we head into the latter part of this week, look to see if we can see signs of further selling sentiment coming in as we head into the end of the week. Imperative, if this is to be a genuine breakout with what we see currently as the selling sentiment that we've seen since the start of 2018, we need to see price now failing to get back above the 200, because if she does get back above the 200, there's more than likely a chance that she'll then head back up towards the resistance level highs that we've seen within this consolidation, because she's been stuck within a consolidation. If she gets back into the consolidation range, she will then more than likely then head back up towards the resistance level highs that we've come from. So here again, be patient, because if we do get this weekly counter closing low, then we do have a clear indication or picture from the market that we're looking to sell as we head further into February and the start of March. Looking at the indicators, we can see at the moment now that the 200 is still supporting price, but that should be a tick, but the 50-period moving average is above price. Here again, in a strong trend, both moving averages would be above price, and this is the reason why we need to see price trading below that 200 and moving away from that 200, because in both moving averages will be effectively above price, which would then indicate that we are in a negative trend. RSI is already below, so we know the relative strength is negative, but you can see as it clearly pulled back, the RSI is starting to pull back. So here again, we know it's negative, but there's a pullback in place. The MACD, because we've gone sideways for so long, the MACD has given us this very wish-washy picture, because it's selling, buying, selling, buying, selling, buying on each of the attempts, and the MACD is just replicating that. So we have the fast line above the slow line, which is a positive sign, and the histograms above the midline, which is also a positive sign. But the histograms have got weaker, so the buying and momentum that we saw here on the hard right edge is starting to dwindle because those histograms are getting weaker. So what we need to see in the coming weeks is price making a new low, i.e. driving low and bearish, with as little wick as possible to emphasize that there's clearly just selling, and then the histograms to cross. So the moving averages to cross, the fast line below the slow line, and the histograms to drop below the midline, which will then indicate, yes, we have continued selling in this case, and happy days, we can then start to look towards those lows we saw back in 2015, 2016, and the start of 2017 as a viable target. Okay, so here again, let's drop down to the daily. Just going to refresh the screen quickly. There you go. So this line over here represents that 200-period moving average, and you can see that price is now hanging around this area. Notice that last week we saw a lot of apprehension, uncertainty at the underside of the 200-period moving average. So what we're looking to see now is price remaining below this point. It's got to stay below this point, because if she gets back and above the 50 again, she's more than likely to head back up towards the resistance level high of the range that we've seen price moving in over the last 6 months or so, which would then indicate we're heading back towards that 200-period moving average. Indicators, both my 50 is above price and my 200 is above price. That's a negative sign. My RSI is below the midpoint, negative sign. MACD, however, is started to cross, i.e. fast line above slowdown, histograms above the midpoint, so that's an indication that we're starting to see bullish momentum coming in, but that's only because of this move to the upside. So here again, if you're looking for opportunities, please be aware that you're trading at a major moving average level, so do so understanding there's more risk attached to this. Ideally what we want to do is to come back at the end of the week to see we have a stronger picture of continued selling sentiment, because we have moved low for the first time in months. I mean, we're talking about the best part of 18 months now we're trading below 200. So there's signs of euro negativity. We just need to see more sentiment driving in to really indicate that we have a continuation of selling, because at the moment now she's pulling above that level. So try and not be tempted into trading aggressively to the upside if we could see that knee-jerk reaction to the downside. Let's have a look and see how the weekly candle is in the candle closes at the end of this week, to give us more of a genuine reflection of where that sentiment lies, and then we can take it from there.